Wall Street operated in a tightly controlled holding pattern throughout Tuesday's trading session, as institutional market participants chose to stay on the sidelines ahead of an explosive macro collision. With the Federal Reserve convening its two-day policy meeting and tech titans Microsoft and Meta platforms preparing to release their second quarter financial accounts tomorrow, equity trading was defined by low volume, tactical positioning across all major asset classes. The major benchmarks closed with minimal variance across the board. The broad market S&P 500 rose 8.12 points, or 0.11%, to settle at 7,421.30, holding firmly above its critical technical baseline. The tech-heavy Nasdaq Composite led the modest upward nudge, adding 48.22 points, or 0.19%, to close at 24,980.30 as buyers stepped in to stabilize semiconductor hardware heavyweights. Meanwhile, the blue-chip Dow Jones Industrial Average added 32.10 points, or 0.06%, finishing the session at 52,242.18. Macro sentiment was further stabilized by secondary economic data and yield performance. The 10-year U.S. Treasury yield held steady around 4.61%, reflecting a bond market that is largely pricing in a pauses and holds stance from the Federal Reserve. Concurrently, WTI crude oil benchmarks attempted a minor technical stabilization near $86 per barrel, allowing transport and industrial equities to consolidate their recent gains. Chip rebound and big tech earnings preview. The central focus across trading desks today was a visible stabilization inside the semiconductor ecosystem following yesterday's aggressive liquidation wave. Hardware pioneer Nvidia Corporation erased early weakness to finish in positive territory, recovering 1.4% as institutional allocators stepped in to absorb supply ahead of tomorrow's mega-cap reporting block. This technical stabilization rippled across the broader chip network, providing relief to equipment suppliers and memory producers like Micron Technology and Advanced Micro Devices. However, trading volumes remained notably below monthly averages, proving that fund managers are hesitant to take massive directional bets before seeing concrete revenue acceleration figures from major hyperscalers. Wall Street is bracing for a high-stakes corporate showcase after tomorrow's closing bell. Microsoft and Meta platforms will be under intense institutional scrutiny to verify whether their massive artificial intelligence capital expenditures are translating into tangible cloud revenue expansion. Guidance metrics from these reporting giants will dictate market sentiment for the remainder of the week. Value consolidation and industrial stability. Outside of the technology arena, defensive value blocks and industrial conglomerates exhibited quiet resilience. Financial heavyweights and regional banking indices posted modest gains as steady long-term interest rates continued to support net interest margin projections ahead of upcoming central bank policy commentary. Transportation and airline equities maintained the majority of yesterday's dramatic upside momentum, supported by lower jet fuel cost projections following the sharp retreat in crude oil prices. Consumer discretionary counters also saw balanced institutional support, with retail giants holding key chart channels as consumer confidence data showed stable forward expectations. Conversely, traditional energy exploration companies traded in a tight, narrow range as global oil markets digested the pause in Middle East hostilities. Portfolio managers utilized the quiet session to rebalance factor exposure, trimming highly volatile momentum plays while accumulating cash-rich, high-dividend blue chips. Sector and ETF flows. A detailed breakdown of sector performance highlights the defensive, balanced posture assumed by institutional portfolio managers during Tuesday's session. Technology, communication services, and financials led the subtle green scoreboard, while energy and materials experienced minor drift. The thematic ETF landscape reflected this quiet wait-and-see environment. Broad index tracking vehicles like the SPDRS and AMP, P500 ETF Trust, SPY, and the Invesco QQQ Trust logged lower than average volume, signaling that institutional allocators are fully hedged and waiting for earnings catalysts to drive the next major directional leg. Small-cap equities held their recent gains, with the iShares Russell 2000 ETF, IWM, tracking sideways near 2,948. The stability in small caps confirms that lower energy input costs and predictable rate expectations are providing essential support to domestic business balance sheets. Forward look and watch list. Heading into Wednesday's explosive trading session, Tactical market execution requires extreme focus on the two major macro catalysts on the calendar. First, monitor the Federal Reserve's FOMC policy statement and subsequent press conference. While borrowing costs are overwhelmingly expected to remain unchanged, allocators will analyze central bank commentary for any subtle guidance regarding future rate adjustments. Second, prepare for the post-close mega-cap earnings blitz from Microsoft and Meta platforms. Technically, the S&P 500 remains securely positioned at 7,421. A positive earnings reaction could spark a breakout toward the 7,480 resistance ceiling, whereas a guidance disappointment would force a retest of key baseline support at 7,380. We advise maintaining a disciplined, hedged capital posture. Ensure portfolios maintain exposure to quality cash-generating businesses while holding adequate liquidity to navigate potential post-earnings volatility. That concludes today's US market update. We will see you at tomorrow's opening bell.